Good morning, traders. History is being made today after, um, well, I wouldn't say that long to be fair. The S&P 500 has completely moved to a new record, officially breaking above the massive 7,000 psychological handle and pretty fresh all-time highs above 7,020. This is the futures, of course. We have a massive technical setup playing out right now. But before we dive deep into the charts to find out trade entries, let's quickly cover the fundamental um, reasons that actually are driving this breakout. The macro picture has flipped. Let's bullish in the very short amount of time. Geopolitical risks are fading fast. Israel is discussing a Lebanon ceasefire, and Iran is reportedly considering a deal to allow ships to sail safely through Oman's side of the strait. Even President Trump has stated the conflict is close to over. What does this mean for the markets? Dropping oil prices, dropping inflation fears, and because of this, the Fed is now expected to keep interest rates unchanged, not just this month, but potentially for the rest of the year. That is the exact green light Wall Street wanted. And in today's um, actually Thursday, the 16th, we have also corporate earnings from heavyweights like Netflix, PepsiCo, and Charles Schwab, plus the weekly jobs claims and industrial production data. We have a recipe for extreme volatility for sure. So that's why we'll have, of course, to also be cautious. If we look at this historic run, it's not really coming out of nowhere. We have been tracking a slightly messy, I would say, inverse head and shoulders pattern, which was marked on our weekly preview on Monday. We had the absolute head down at 6,030 or so, and then the two shoulders are a little bit further apart. The one is big, the other one is small, but there is a neckline that is actually sloping to the downside. With prices being rejected several times down here on the neckline and then shooting higher in what seems to be a wave three of a potential impulse wave. How I say this is something like that. So we are indeed it looks like we are in the final fifth wave. Let me just confirm that quickly. Yes, I'll come back to that. And when typically this happens, we want to connect our two and our four and then our wave one and see when we can actually trade within. And you see that we have actually currently reached a sort of an interesting point, given that we are rejecting or retesting again the upper channel of this potential move. So the structural fall was the launchpad here for this entire rally, and then the fact that we've actually broke above the 6,850 and we've left that behind as support. We haven't even retested that, to be fair. It's what really drove this right now, trading above highs. So mapping out this potential five-wave leg is because we are, of course, in price discovery territory, is exactly what gives us a little bit of context in terms of what levels to to wait next. Now, obviously, we could see a retest of the 70-20 and as well as the 70K, and then flip once again to higher levels. And that is something that I'm looking, because the reality is that the RSI is still sitting on high levels, and there doesn't seem to be any sort of slowdown. So here's what we do. We typically connect our net distance, right? Our waves one and four, okay, to identify potential targets next, okay? So this brings us to 7,065. This is a 61-point dive Fibonacci, as well as shows us the 38.2 at 6,940 on the downside. So these are the levels that we actually could see a consolidation. So we could see initially spike up to that level, and then a drop back below the 7K if we'll go down below the 7K. And if that breaks, then we'll look at the 38.2, 6,940. So if all resistance flips, okay, to support, it means that fifth wave might still have a little bit more juice. And above the 7,070, we'll be looking next is the 7,270, but there is also a less major level, 7,150. This is just, of course, from one attempt, right? Now, what else could be happening here is we could be actually looking at an extended wave internally, because this correction is a little bit short in terms of in magnitude and shape in comparison to the this wave. But this could be essentially what we might instead see. Okay, and I'm just gonna make that a red color to separate it. You see, this looks like more like a more possible five-wave move with a third one being extended. Okay, so in this particular case, we'll be looking at the 161 extension, which actually brings us to wave three. So this is typically the extension in wave three. Okay, so this is also another scenario that I am looking. This brings down to a potential deep correction to 6,845 for wave four potentially, and still maintains a peak at 7,150 or so. Okay, so these are the two scenarios that I'm looking to the, of course, to the upside. So it looks like to me that in the first scenario, which isn't more likely than this, we could extend a little bit higher and then correct and pull back. And in this second scenario, we could be looking for a faster move to the downside, given that we'll have resistance at the 161.8, FIBO at 7,030. 7,030 to 7,050 really doesn't make a difference, to be fair. But I would be looking for a deeper correction, okay? And the deeper correction could get us down to that level. Another thing, of course, we would be really glad to do is that when we do have a potential peak, for now at least, this is showing us a wave two, and we would measure the wave three correction. We'll look at the 38.2 and the 23.6. This brings us to the 6,820, 6,900, and then you've got that. So this creates a really sort of quite of a strong base, if that makes sense. Okay, so watch this 7,020 pivot like a hawk today. And are we extended to 70.50 or so, pulling back to 6,940 for a healthy reset? We have to let the price and action and today's earnings volume dictate the bias. So trade safe, manage your risk, and I'll see you in the next update.